Hot news stocks slide on renewed fears of a global economic slowdown. The Washington Post. U.S. stocks slipped Tuesday as global growth worries were resurrected on news out of China and the World Economic Forum in Davos, Switzerland. The Dow Jones Industrial Average sank 462 points, or almost 2%, at its low, dragged down by Dow DuPont, 3M, Boeing and Caterpillar, companies with significant exposure to the Chinese economy. The blue-chip benchmark rallied late in the day as presidential economic advisor Larry Kudlow appeared on CNBC and denied news reports that talks between the Trump administration and Chinese trade officials had been cancelled. In fact, there's no cancellations, Kudlow said. None. The Dow immediately snapped back, closing the day down almost 302 points, or 1.2%, at 24,404. The Standard & Poor's 500 stock index fell about 1.4%, its biggest drop since January 3. The S&P, the Nasdaq Composite, was well off its recent highs, down 1.9%, as technology stocks suffered. The renewed volatility after several weeks of relative calm followed weekend reports from China that its official economic growth for 2018 came in at 6.6%, its slowest in 30 years. There was also news. China is dealing with something very new, which is consumer-driven slowdown in growth, said Glenn Youngkin, co-chief executive of the Carlyle Group during an appearance on Fox Business Network with anchor Maria Bartiromo. One of the great and that consumer class is nervous, Youngkin said. They're nervous for data released Tuesday morning also indicate U.S. home sales are at a 3-year low. Adding to the pessimism in the markets were additional forecasts out of Davos that global growth, including for the United States, would be less in 2019 than it was last year. It's going to be globally a slow up, billionaire investor Ray Dalio told CNBC during a Tuesday interview from Davos. Dalio, it's not just the United States. It's Europe. A letter from respected investor Seth A. Klarman warning of a potential financial crisis, rising out of global debt, international trade tensions and a retreat of the United States from the world stage, added to the gloom coming out of Switzerland. Klarman runs the Post Group, which manages about $27 billion. His letter was the sentiment is far from unanimous. Stephen Swart, the drop in stocks occurs after 4 weeks of gains and as worries deepen over the partial shutdown of the U.S. government, which has lasted a month with no end in sight. Both sides of the shutdown debate need to figure out how to get out of this mess, said Jared Bernstein, who served as the economic advisor to former Vice President Joe Biden. There's a real sense that a lot of people in charge not only don't get it, but they are making things worse, Bernstein said. Whether it's Trump, Tuesday's pullback arrived after a 4-week rally spurred by a wild December that saw stocks hit a bear market, only to rocket upward as the Dow scored its highest single-day point gain in history. Investors pounced on the decline in stock prices, which was brought on by a final quarter of 2018 that wiped out the year's gains. Then came Tuesday's report from the National Association of Realtors showing sales of existing U.S. homes fell to an annual rate of 4.99 million units in December, the lowest in more than 3 years. It's kind of natural to give back some of this big gain, at least in the short term, said Scott Wren, senior global equity strategist at the Wells Fargo Investment Institute. The magnitude of crude oil prices were also feeling the pain of growth fears. Oil prices dropped.
Raindrop, drop top smoking, no cooking the hot pot. Fucking on your bitch, yeah, that. Looking up, open the park pot.